In finance, what's a company really worth? Let's dive into the two major schools of thought.
So, how do you find a business's true value? I mean, this is the compass for every single investment.
Okay, so you've got two main teams. One is all about theory, the other, all about the market.
All right, let's start with intrinsic value. The star player here is the discounted cash flow model, the DCF. The whole idea is pretty simple, actually. A company's worth is all about the cash it's going to make.
Its fans love it because it forces you to think long-term and ignore all that market chatter. It's an anchor.
Okay, let's flip to the other side, relative value. This one just looks at what people are paying right now. Basically, value is what someone's willing to pay for it. It's simple, direct, and reflects today's market mood. But here's the catch. Both sides have some pretty big flaws. Let's get into the cross-examination. DCF's biggest problem? It's super fragile. That's why critics call it a castle built on sand. And you can see why. Just a tiny tweak to one of your assumptions, and the whole valuation can completely change. And get this, a huge chunk of that value, like 80%, can come from a guess about, well, forever. Okay, so DCF is shaky, but what about the market? Well, in a bubble, you're just comparing one crazy price to another. Plus, how do you even decide what's a comparable company? Yeah, that's way more art than science. So the analyst's own biases can get baked right in, hidden behind what looks like objective market data.
So, who wins? It feels like we're stuck. Is there a right answer here?
Well, the pros don't see it as an either-or question. The real secret? You gotta use both.
It's all about checks and balances. You use multiple methods, and you let the models talk to each other. This gives you a range of what a company might be worth, not just a single magic number.
Think of it like this. DCF tells you what a company should be worth. The market tells you what people think it's worth.
And that gap between should be and is, that's everything. That's where you find your big opportunities.
So the real question for you is, how will you use this gap to spot your next big move?